Good afternoon. My name is Clive Richardson, the chairman of Albion Tech and General, and it's my pleasure to welcome you to the company's annual general meeting. Alongside me today are my fellow directors, David Bender, Swarupa Pattachi, and Simon Thorpe, who is the Audit and Risk Committee chair. Also present today is Will Fraser-Allen, who is the managing partner of Albion Capital, the company's investment manager. He will shortly give a presentation on the results of the company for the year ended December 25, and then will join me for a Q&A session later. So moving on to the formal business, the quorum for the AGM is 2 members entitled to vote in person or by proxy, and I can confirm that this has been met, and therefore I declare this AGM now open. The notice of the meeting has been in your hands for the statutory period, so I will also take the notice as read. To maximise engagement with shareholders, the board has again arranged for the Lumi team to broadcast this year's AGM using its online platform, which enables members to interact fully, including taking part in a Q&A session and also voting on the board's proposed resolutions. Before I hand over to Will for his presentation, I would just like to quickly explain how the voting process will work. But let me first state that if you have already submitted a proxy vote to the registrar, you don't need to vote again unless, of course, you wish to change your vote. So the resolutions will be voted on by way of a poll. The votes received under this process will be added to the proxy votes that have already been received and verified by your independent registrar, Computershare. Once I declare the poll open on the Lumi platform, a list of resolutions will automatically appear on your screen. Please select the option that corresponds with how you want to vote, and the option will change colour, and a confirmation message will appear to indicate your vote has been cast and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, you have the option to reselect your choice. Should you have any questions on the voting procedure, please send them through the platform and someone will respond promptly. Thank you. I now declare the poll open. Following the manager's presentation, the directors and manager will take questions from members on the company's financial results and proposed AGM resolutions. I'd like to thank everyone who's already submitted their questions through the chairman's email address. Thank you. If you wish to ask questions, please select the messaging icon from within the navigation bar and type your question at the top of the screen. Click on the arrow icon to the right of the text box to submit your question. Please do so as soon as possible so that it reaches us ahead of that section. I'm now going to hand over to Will Fraser-Allen for his presentation. Thank you, Will.
Clive, thank you very much. A big welcome to all our shareholders today. It's great that you could join us. And what I'm going to do, as Clive has already said, is I'm going to talk you through the results for the last financial year, which was to December 2025. So if we move to the next slide, and the next one. Let's sort of start with my usual background slide, and I sort of feel like a bit of a broken record as every time we seem to do this, I continue to talk about the broad uncertainties that we operate in, which are both sort of macroeconomic but also geopolitical. But I've also now added political instability as well in the UK. So I'm afraid, we do still have the very difficult geopolitical situation, so made even more difficult by Trump deciding to have a punch up with Iran and with Ukraine still going on, and indeed still the situation in Lebanon. So there is a lot of that. The difference, I think, this time is that we've also now got oil prices going up, and I'm afraid history does tell us that oil price increases does lead to higher inflation and can lead to global recession. So we just need to sort of be conscious of that. The political instability in the UK, I mention only that there is currently a potential for a leadership a leadership election within the Labour Party. So whether the position of the existing Prime Minister going forward will become clearer over time. But there's a lot there. So we are operating in, as all businesses in the UK and indeed arguably globally, we are operating in interesting times. That said, our job is to find and invest in the best entrepreneurs or founders, as we call them, and to very much invest behind technology trends predominantly, and looking to invest in mission critical products and services which we believe will be more resilient to uncertain times, than perhaps some of the more consumer-facing opportunities that we might have considered. We did deliver a positive return, which I think was good in the circumstances. And also, as you all know, we went through a merger exercise, taking the 6 Albion VCTs down to 3, resulting in 3 larger, more cost-effective VCTs. And we are seeing the benefit of that. So the ongoing charges are starting to come down in this VCT. We're 2.46 and now down to 2.33 as we progressively deliver those cost savings. So if we go to the next slide, financial highlights. So we ended up with a net asset value of 70, just over 70, just under 71p. Total shareholder return to date, which is the combination of all dividends paid to date and the existing NAV, is now 205.33. The actual return for the year was 1.74%, which is behind that needed to deliver our 5% dividend. But it's very important in venture capital portfolio that you look at long-term returns rather than the volatility that can come to bear in any individual year. And our dividend is in accordance with our policy of delivering around 5% of NAV at a amount of 3.6p. Moving to the next slide. Longer term performance data. So 5% is the annualized 5% is the key number. So I'm very pleased to say that on 10-year basis at 61%, so an average of 6%, we are above the 5-year, so the 5% target, as indeed we are for 5 years. And we are a bit below it on a 3-year basis, driven by a more challenging recent period. Moving to the next slide. Sort of breaking down the results in a bit more detail to sort of put out the key highlights. Now, this is a year before the merger and then a year after the merger, so take that obviously needs to be taken into account when looking at these numbers. Obviously, the column, sort of 85 column on the whole, is somewhat larger to reflect the larger company. So the fundraising at 42 million looks particularly high. But that is because it's a large business, but also the timing of when we launched the top-up offer was influenced by the merger. So as a result, we get two fundraising years, 2 chunks of fundraising years in a single year, hence why that looks particularly high. Exits, we obviously had the very strong. We had a strong year for exits, which was good news. Generally, M&A activity has been somewhat more difficult to reflect the uncertainties more generally. So I was pleased to see us delivering 16.7 million of exit proceeds in 2025, and that was in Evel, Accellex, and Locum's Nest, and I can talk about that in a bit more in a moment. Investment rate 21 million, so lots going on there. 15 new companies added to the portfolio, and an ongoing program of supporting the existing portfolio as those companies grow. Share buybacks up because of the increased size of the fund, and similarly dividends up because of the increased. There's been no change to the underlying dividend policy. It's just a reflection that the company is larger, therefore in absolute terms the dividend payment has increased. We move to the next slide, which looks at the sort of key valuation movements. You'll see on the positive, Aviva, which is our health tech company, has had very strong growth, and on the back of a substantial fundraising, we saw a big uplift, and that's a business that is now of very substantial size operating in a number of European jurisdictions. And then we've got TEM, which is a business which allows small and medium-sized enterprises to access renewable energy through a modern platform, and that's growing very fast and has raised a substantial round too. Against that, as you would expect in a venture portfolio, we have had a more challenging times at Panacea, and Pravica has launched a number of products, and the revenues from those are taking longer than we might have anticipated. Then there are various other ups and downs, and those can be seen in detail if you look in the relevant page on the annual report. So if we move to the next slide. So quick reminder of what the portfolio is now looking like. It has transformed over the last few years into a predominantly healthcare and software portfolio. There's 70 companies in the portfolio, so well diversified, and importantly employing over 4,400 people, mostly in the UK, which is a core objective of VCTs in return for the tax relief that you enjoy as shareholders. So you're seeing AI and data that is now sort of 19%. Fintech is a growing area, some 37%, and we've seen some interesting success within fintech. Health tech still sitting at around that 20% area. And then the sort of legacy investments such as renewable energy and others are coming right down as the portfolio is transformed in accordance with the new rules and focus that VCTs are required to have per the various regulations that we operate under. If we move to the next slide. This is again just really giving you a snapshot in terms of where the portfolio is in terms of stage, looking at it in terms of where the businesses are in terms of revenue and indeed employees as two proxies for maturity and size. The important point being this is by value, not by number of companies. So you're now seeing that we've got some very substantial businesses in the portfolio such that 70% of the portfolio is now in businesses with revenues over 5 million. And indeed, if you look at over 50 employees now, counts for 65% of the portfolio. Next slide, please. Top three. This is a feature of a venture portfolio, is that you are looking to back the successes or the outliers, as we call them, and it is by being able to hold those over time that you deliver the stronger returns of venture capital. So we've got Quantexa, Aviva, and Pravica in there. Quantexa is selling data analytics into a variety of sectors now, not only the global banks, but also increasingly in government and healthcare and other areas. You may have seen a recent announcement that they have won a 10-year, £150 million contract to the supplying to the HMRC, which is great news. So that's becoming a very substantial business on all the various metrics shown on this slide. And Aviva similarly has grown very significantly, and annual revenues grown by over 100% in the last 12 months, and now employing some 900 people. So those are very substantial businesses. And then Pravica has slowed a bit in the year, as I've alluded to earlier, but it still has a franchise in its Cyalenor, its main pediatric drug. If we move to the next slide. Lots of new investment activity. I just pick out a few here just to give you a bit of a sense. On the healthcare side of Varo, and that's a digital platform which allows access to minor health issues in a digital way. So this is very much the way the world is moving in terms of trying to keep people out of doctor's surgeries where possible to maximize the availability of appointments by providing other routes. And it's all delivered around the sorts of areas that pharmacies are able to prescribe on under the increasing prescription ability of pharmacies. Bound very much in our fintech area, that's helping as small and medium-sized enterprises manage their foreign exchange exposure. So it's like having your own foreign exchange department within your company, even though you're too small to have one. Latent was our first foray into the whole world of digital games, and it's using AI to massively speed up the rate at which animation is created. Labris is a move into defence, and that's a platform that allows the military to communicate, and that's a product that is relevant right across the world as well as the UK military. And then finally, Kinfolk, which is very much in the new world of AI, which is allowing corporates to manage their workforce and provide access to information that employees require, benefits, and the like, using AI as a way to efficiently do that. So freeing up the time of HR professionals within the business who can therefore focus on other things. If we move to the next slide. Follow-on activity is absolutely critical to what we do. So for the sort of bigger ones were Gravity, Mondra, and Cato, which do. And then I included a follow-on onto Phasecraft, which is just to highlight continuing support of one of our deep tech investments, which is a growing focus for the VCTs, and that is providing algorithms used on quantum computers, and that's really exciting developments going on there. And just by way of a reminder, that is a investment that the VCT was able to access because of the activities that Albion does elsewhere, where we run a couple of funds for UCL. So that's given us great access to a very interesting business we might otherwise not have seen. So if we move to the next slide. Just wanted to touch on the impact of AI. This is very fast moving. There's lots of views flying around. What we have seen is that there's been quite a negative reaction when you look at the quoted markets in respect of software. And we have seen a number of valuations coming down, and that's driven by the uncertainty around how AI will impact software businesses, or indeed how it's going to impact companies more generally. And I think it's worth saying that it's been fairly indiscriminate in terms of which companies have been hit in a valuation sense, and there's been very little distinction between what companies do, what sectors they're in, and importantly, to what extent they are protected from AI being a negative influence, but also to the extent to which their software product will actually be enhanced by AI through the additional functionality that AI brings. And our sort of analysis of our portfolio is that we are, well placed in this regard because of the type of businesses we back, those mission critical solutions, particularly in regulated areas such as fintech, health tech, where app accuracy is important, and therefore we believe there'll be a very strong need for very specific software to fulfill the requirements within those sectors. And in fact, we see AI as a way of improving the software within those areas. So clearly there is going to be some uncertainty, and there's an awful lot going on. But I think if you sort of look over the horizon, we see a positive ultimate impact of AI. If we move to the next slide. Thought I'd just sort of run through our sort of broad investment strategy in a slightly different way to what I've done before, but it's, what is it we're investing in? So it's scalable and resilient businesses. And this is all around having that real specialism within the team and areas that we focus on. But importantly, looking for businesses that we believe are globally scalable. And that is an important distinction, perhaps to others, and that we really are looking for those global success stories, because we believe it's those outliers that will really deliver top quartile returns in the future. And we do have the benefit of being a VCT, therefore our capital is long term, or known as permanent capital, and that does allow us to support companies as they grow. And whilst we may divest in limited ways through the journey, we are able to support companies for longer and therefore capture more of the upside for the ones that are most successful. But it does mean that we have to operate within the VC regulations. So therefore, we are looking to deliver risk-adjusted returns in that context. But that's not to take away from the fact that we are investing in high growth, higher risk opportunities, but we're doing it through focus, but also in terms of creating a diversified portfolio, both by subsectors of what we invest in, but also in the maturity profile of the portfolio itself. We have the flexibility to invest from early stage through to Series B, and that is providing that diversification by stage and maturity as we build up the portfolio. And then what do we do once we're invested? It's all about how do we help those companies grow faster? What is the support that we can give to those companies? And that's through our portfolio platform team, but it's also through the expertise that we've built up as investors over the 30 odd years that we've been in operation. So if we move to the next slide. 30 years, we are celebrating our 30 years since the first Albion VCT was raised. So it's quite a milestone for the business. Now, that business originally was part of Close Brothers and became Albion in 2009, but it's a 30-year pedigree that we're now celebrating. And in that regard, with a couple of things that we're doing, we are moving the registrar services for you from computer shared to city partnership to provide a more efficient service. But we are also looking to consolidate the two brands that we operate under, which was Albion Capital and Albion VC, and we are consolidating to a single brand, Albion VC. So if you see collateral coming out from Albion with Albion VC on it, it is no different to what was historically known as Albion Capital, but it just simplifies our messaging to the investor world and indeed the portfolio companies and entrepreneurs that we seek to back. We move to the next slide. So where are we? What's coming down the track? Look, we are going to have ongoing uncertainty, so we can't get away from that. We've got to learn to operate within that context of uncertainty. Valuations of quoted software companies will continue to be volatile, although we have seen some improvements and actual increase in multiples in the most recent quarter. And it'll be interesting to see how that plays out as people become more comfortable with the role of AI. We do have a well-balanced portfolio, as we've discussed, and we are continuing to invest across new and existing companies. We have a decent level of cash to capitalize on new opportunities, having had the good fundraising that we discussed on an earlier slide. And then the other highlight to make is that in the last budget and with effect from April, a number of the investment limits that apply to VCTs and around the size of companies was increased. So that provides us with a very interesting opportunity to continue to back our strongest and most exciting portfolio for longer than we would have previously done. So that's very helpful in terms of how we manage the maturity portfolio of a maturity profile of our portfolio. But it's also it does open up opportunities for us to invest into some more mature opportunities. But we are very clear that we will continue to invest in early stage companies, both because that's where we have seen success, but that's also a key function of the VCT scheme and why you as shareholders enjoy a number of tax benefits. So lots going on. And if we go to the next slide, we've just announced the first quarter results. That's just been announced a few minutes ago. A small decrease in the first quarter, but again, it's very difficult to focus too much on a short period. So now sitting at 70p, we've got first dividend of 1.77p payable on the 12th of June. We will continue with our annual shareholder seminars so our annual general meetings virtually. And just to let everybody know, we will be having our annual shareholder seminar, which is a physical event, and I very much hope that many of you will be able to join the board and Albion, the manager, and that will be on the 5th of November at number 11 Cavendish Square, where we've been before. So if you would like to come to that, and inevitably places are limited, please reserve a place by emailing info@albion.capital to secure a place at an early stage. Just finally, just an update on our top three investments. They are sitting at 28.7% of NAV. So lots going on. I look forward to reporting further to you at this time next year, and in the various reports that we write in the annual statements. So on that note, I thank you very much for listening. Thank you very much for joining us today, and I will hand back to our chair, Clive. Clive, over to you.
Thank you very much, Will. So the next stage is to do the Q&A section. But before we do that, I'm just going to make a couple of observations. So the first of which is that although this is a formal Q&A process, people should feel free, or shareholders should feel free, to send questions to myself at any time, and we will endeavour to answer them throughout the year. The second point is I just want to set out the approach we take to your questions. So at the AGM, so under the Companies Act 2006, shareholders are, of course, entitled to ask questions relating to the resolutions today. We seek to answer those questions at the meeting, provided it's not unreasonable in the interests of the company to do so, it doesn't impact the good order of the meeting, and the information is reasonably available and not confidential. Now, if there are other questions that fall outside that statutory scope, for example, around the manager's presentation, I will use my discretion to decide whether to take those questions. But of course, if they are vexatious or repetitive or not asked in good faith, then I will not pass on those questions out of respect for the time of the shareholders present. So with that little preamble, we've got quite a few questions this year. The first question is a RemCom question that I'm going to ask my colleague David Bender to respond to. And the question is that given the underperformance relative to the FTSE All Share, particularly over the last year, as shown on page 8, why do the board consider it appropriate to vote themselves a large increase in remuneration? So David, over to you for that question.
Good afternoon. Thank you, Clive, and also thank you for the question. I'd like to make a couple of points in response. The first is to note that the returns of the VCT are inherently driven by the performance of early stage companies, which can be volatile in nature. Therefore, short-term comparisons to broad market indices such as the FTSE All Share do not always provide a relevant comparison by which to judge the underlying progress of the portfolio. The second point is with regards to the directors' remuneration, where fees have remained unchanged since the 1st of January 2023, at which point it was agreed that they would be reviewed after 3 years in line with the remuneration policy. Following a period of high inflation since that date, the merger with Albion KVCT plc, and a marked increase in the responsibilities of listed company directors generally, a benchmarking exercise was undertaken which concluded that the current fees were below industry averages and not reflective of the responsibilities of the role, and the board therefore considered the increase to be appropriate. I'd also add that the annualised increase of the fees is below that of CPI over the same period.
Great, thank you, David. I've now got 5 questions, Will, for you. What I'm going to do, Will, is read out all 5 questions just to make it more efficient, and then maybe you can go through them. So forgive me for it's going to take a bit of time, but here are the 5 questions. So the first question is to do with upfront tax relief reduction, and that's a sort of a new VCT ruling, and perhaps, Will, you could comment on that. The second question is around, are there any indications that Albion's VCT performance will improve? That was another question. The third question is around non-interest-bearing loan notes. How does the company receive an investment return on the 4.3 million of unquoted loan stock that is non-interest-bearing? So that relates to some information on page 95 of the annual report. The fourth question is around the frequency of dividends. So the question is from a shareholder was, when I was introduced to Albion 15 years ago, the main selling point was a tax-free dividend every month. Now it is every other month. Can you revert to 12 dividends per year by paying quarterly? And then the fifth question, Will, for yourself, is around Elliptic and the value of that investment. So, Will, over to you. Thank you.
Wow, lots of questions there. That's great. Okay, so let's start with the upfront tax reliefs. Just to remind everybody, the surprise announcement in the last budget, so that was November last year, where as well as getting the very positive news that we were going to have more flexibility in terms of what we can invest in, which is by the way really helpful. The slight sting in the tail was that they reduced the upfront tax relief available to you as potential shareholders from 30% to 20%. So that did come as a bit of a surprise. It was sort of presented as a bit of a sort of quid pro quo relative to other tax reliefs available to EIS. In terms of what might or might not happen, it's extremely difficult to know, as you would expect. There is a discussion going on with Treasury and indeed government more broadly as to highlighting that actually this seems counterintuitive at a time when we are all being asked to do more to help growing companies in the UK. So there is plenty of discussion going on that. However, for the purposes of this VCT and how the board think about it, we are working on the assumption that it is 20%. We may prove otherwise, but it is the right assumption at this stage because we have no evidence that it won't. So everything the board is doing in terms of thinking about fundraising, thinking about cash flows, thinking about how they manage the portfolio profile is all being done in the context of a 20% upfront tax relief and the board's view of how that will potentially impact the amount of fundraising that the company is still able to do. I think a key point, however, is that 20% upfront tax relief is difficult to come by from any other means, and the reduction of 10% on a long hold over the VCT is actually not a key component of your return. How are we going to improve performance? It's really important that when we think about venture capital, we think about the long-term nature of venture investing, and it will inevitably be volatile in terms of how those returns are delivered because they're often so often attached to a small number of outliers, and the big returns are usually driven by those outliers being sold, and they're usually sold at a substantial premium to the underlying carrying value. So I wouldn't get too gloomy about any particular year thing. And what I would point to when I think about the portfolio is, businesses in the portfolio like Quantexa, which is a very substantial business, and as I described, is doing very well. I think there's some very interesting businesses coming through in terms of the new investments. I talked about TEM, which is and Elliptic, and I'll come back to Elliptic. So I've got a question on that. And then the other thing is, I think we will be able to benefit from the new rules, which will allow us to invest for longer in those successful investments. And it's interesting, if those rules have been in place, we might well have back when we were building our stake in Quantexa, we would have been able to invest in a round later than we currently were. So that would have been beneficial. So I think there's lots to be optimistic about, but what I won't shy away from is that there will be volatility in how those are delivered, and any financial advisor, and indeed many of you as investors will view, investing in venture capital as a long-term investment, and you should look at the performance on a long-term basis. I hope that gives a bit of a feel. The next question was around loan notes, and it's a good question. Going back, there was a time when VCTs used to derive quite a lot of return from loan stocks. Obviously, the whole investment environment, focus has changed far more to high growth, earlier stage businesses, which are in themselves loss making. So therefore, this isn't about receiving interest from those underlying loan notes, as we call them, or just loans. They actually perform a different function. So most of the loan stock balance that you're seeing in the accounts actually relate to what I would call equity-like loans, and they're used in early stage investing, often where you are bridging to the next round. So we know it's putting in money in advance of a future round, and they're structured as convertible loan notes, so the loans will convert into equity. So ultimately they will largely end up being equity, so they don't generate interest per se, but they will often be priced at a discount to the price the shares will be issued. So you get a element of return to represent in the run up to that conversion, and then obviously your opportunity to get further return is by owning the equity that derives from that conversion when those businesses are sold. So it's a slightly different type of loan stock than perhaps one was thinking about if you were remembering the old loan stock in the days when people were doing lower risk investments. Frequency of dividends, good question. And I know the boards thought about this a lot when we were doing the mergers, because as you said, it used to be because we had 6 funds, we were able to pay dividends every month by things. So the boards did consider whether whether it would be possible to do quarterly dividends. And mechanically it is, of course, any investment company can pay quarterly dividends. I think what was interesting was just how expensive that is to do. The cost of paying dividends is very substantial even for funds of this size, and that's and in the final analysis, we found that by moving to quarterly dividends, we would have been significantly eating into an important part of the cost savings that the mergers delivered. So whilst we did acknowledge that there was a trade-off here between people receiving monthly dividends, the cost of doing it was on the other side of the equation, and certainly in conversations that we did have with some shareholders, it was felt that every other month, 6 times a year, whilst not monthly, was still regular enough for people to manage an income stream. So it was a balance, and we could have gone either way. But I think given one of the core objectives of the merger was to deliver cost savings, the disproportionate impact of the cost of doing it felt counterintuitive to what the boards were trying to achieve. And then finally, a question on valuation of Elliptic. So Elliptic is a top 10 investment. It's very simple terms. It's a sort of anti-money laundering product for the crypto world. So it effectively allows a whole variety of institutions and companies to manage the risk attached to crypto assets of it being abused by money launderers and other bad actors. Obviously, there has been an enormous growth in the quantity of crypto assets in existence. So as a result, Elliptic is doing very well. It's an extremely rich data set that it is creating, because it is building up a history of transactions within blockchain, within the various blockchain and things. So it's become very valuable. It's grown very fast. It's used by banks that want to offer crypto products. It's used by the crypto exchanges themselves. So the valuation has jumped up significantly to reflect the high underlying growth. It's one of our exciting businesses. And it recently did a large fundraising of $120 million from a number of investors, including NASDAQ Ventures. and that fundraising was at a decent valuation uplift. We have in fact further invested in that round as a demonstration of this idea that we will use the new rules to be able to invest for longer in our companies, because Elliptic is absolutely an example of a company which we wouldn't previously been able to have supported this round that we now can. So the valuation increase is all good news. It's linked to an external valuation from in a very $120 million round. So it's very much in line with what we are seeking to do and recognition of a company that's doing well. I hope that answers all those questions, Clive.
Yeah, no, thank you, Will. And the last two questions I'm going to tackle myself. One of them is around Albion Capital's partnership with UCL, which Will alluded to earlier in terms of Phasecraft, which was one of the investments that came out of that stable. So from AATG's perspective, from our perspective, this provides us later on with the potential to invest in new opportunities in deep tech that have originated in UCL. So it's an exciting source of potential investments. Of course, it's incredibly important to avoid conflicts of interest in this case, and we're very aware of that, and we have separate investment committees to ensure that's the case, and very cognizant of that fact. The last question we had is around the share price discount, so the 5% discount for buybacks, and whether that was under review. At the moment, the board is not planning to change that, but as with all of these items, we permanently keep them under review. So thank you, everybody, for sending in those questions. I hope we answered them. And as I mentioned, please feel free at any time to send in additional questions. And again, we will always try and do our best to respond to those questions. So having now concluded the Q&A, we'll now continue with the formal business of the AGM. So the full text of each of the resolutions were sent out in the notice of the meeting, and the board is recommending that members vote in favour of all of the resolutions. Now I'm going to briefly run through and summarise these 14 resolutions. So the first resolution is to receive and adopt the company's accounts for the year ended December 25, together with a strategic report and the reports of the directors and auditor. The second resolution is to approve the directors' remuneration policy. The third resolution is to approve the directors' remuneration report for the year ended 31st December 25. The fourth resolution is my own re-election as a director of the company. The fifth is the re-election of David Bender as a director of the company. The sixth is a resolution of Swarupa Pafachi as a director of the company. The seventh is the re-election of Simon Thorpe as a director of the company. The eighth resolution is the reappointment of Johnson Carmichael as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. The ninth resolution is to authorise the directors to agree the auditor's remuneration. The 10th is to allow the increase in directors' aggregate remuneration. The 11th resolution is to allow the directors to allot new shares. The 12th is to allow the directors to allot new shares under the company's dividend reinvestment scheme. The 13th is a special resolution to give the directors the power to disapply preemption rights. And the final resolution, which is number 14, is a special resolution to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Please may I ask all shareholders to submit their votes on the resolutions, as the poll will now be closing shortly. So results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on Albion Capital's website as soon as is reasonably practicable. So I can confirm that the voting is now finished, and I now declare the poll closed. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar. You'll see that on the screen. As you will note, the proxy votes are comfortably in favour of the proposed resolutions. So again, thank you, and that concludes the business of the AGM. I'd like to thank all the members who've joined the AGM by webcast. The board welcomes any feedback you may have, which, like questions, you can do by sending an email to me at aatgchair@albion.capital. So once again, thank you, and I will now formally close the AGM. And on behalf of the board, thank you for joining your company's AGM. Meeting is now closed.